If you'd like to see more of our videos, hit the subscribe button to stay on top of the market news. Good morning, traders. Welcome to today's market review. This is Fred Razak at CMtrading. Today's October 15, 2020. And today is Thursday morning, so looking at the highlights of the day, British pound actually surging higher. But looking at the economic events of the day, starting out with just one event happening all day long. Out of the EU, we have an economic summit. So really important, and I'm sure they're going to be addressing some of the coronavirus issues and some of the pandemic's surging numbers as we go into the fall in the Northern Hemisphere. Now looking at the currency, starting out with the British pound, obviously rallying back, while the Aussie dollar retraces this morning after having some unemployment numbers coming out. Now looking at the indices, both the NASDAQ and the Dow Jones take a step backward. We're losing some footing and retrace. Now that's going on the back of some of the fact that some of the earnings reports came out. Now looking at the commodities, also gold retraces while oil on the upper range of its 39 to 40 and change range. Now looking lastly at the stocks, it's a mixed bag. And yesterday, to elaborate, we've had a few earnings coming out from the airline industries, and today continuation of banks that are coming out with earnings this week. Now towards the end of the month, we have high tech with some of the high tech players that are coming out with earnings. So let's take a look at the markets and see what we can expect from today's trading. So let's take a look at the Aussie USD first. I think it's the nicest graph that we have going on for us. Let's draw that a little bit clearer. Looking at this move this morning, we did retaliate and retrace, retrace down to the 71.12-ish area. And you can see pretty much that we are testing this low again. Okay, we succumb to the 7245-ish area on a 4-hour chart. But needless to say, okay, it's still relatively a tight range. Now looking at the Gbp Usd, you see that we are trading pretty much in this range. We're now at that upper limit. Let's see if this was a fake out spike, okay, and just a news event, and we're going to retrace back to this 2870-ish level. Now this altogether is 100 and something pip move, which is a decent move for intraday. Now looking at the Euro USD, I'm going backwards here just because, you know, the biggest moves are coming from some of the other major players like the GBP and the Aussie USD as opposed to the Euro. The Euro has been in a quite tight range, okay, since the beginning of the week, 1833 down to now 1736. It's within 100 pip range. Now if we do break this level 1736, we could see it further retrace back down to the lower 1700-ish level. Okay, so some potential move here later today. Now jumping into commodities, gold being really stubborn, and to tell you the truth, it's been a very choppy ride over the past couple of weeks. I mean, it seems to be like we've had, 100 points going up, 50 points going down, nothing consistent over time being bought. Okay, so we are still experiencing a choppy market. We're still in an upwards range here. Okay, trading trend. Okay, as you could see here, we have that initial stop. We had that second retracement, and this is our third retracement. But what I don't like about this is that the top here is becoming less of a formation, okay, and not beating this 1933, okay? I would have expected it maybe to consolidate somewhere around here. And as it stands right now, it does look like a head and shoulders, but head and shoulders are usually a longer time frame, so I'm not going to pay too much attention to that as I'm looking to this right now, okay? So if we do break this trend line, then we could certainly see it back in the 1868-ish level, okay? So keep that in mind as we're trading gold, because this has been still in play, even though it hasn't had that nice flow, okay, where it's being bought, retraces a little bit, being bought, retraces. It's a much choppier market, but it's still trading with character. Okay, now jumping into oil, okay, trading at 41.35, hitting almost that level now, retracing to 14.93. Now, if the skies don't open up, okay, and people are going back to lockdown, I would expect this to retrace further. And I have to keep an eye on this, okay, because we may see it retrace back to this 39.11-ish level. So keep that in mind as this may potentially retrace on the downside. 38.11 on the downside. Now, you have to keep a couple of things into perspective. Number one, this pandemic is already factored in. It's not a surprise. We're not back in February of 2020 where it's still a surprise that this is the reality that we live in today. However, just keep in mind that if the markets do recoil and the markets and people are going back into lockdowns internationally in the most of the northern hemisphere, then you should expect the prices of oil to retrace. So keep that in mind. Now, looking at the Dow Jones breaking this 28,300-ish level this morning, we're retracing down to 2873. Now, this was really a capitulation up at 28,800-ish level. And this is why you've got to do your due diligence of doing historic charting, okay? Because we did have some resistance at this 28,800-ish level back in January of last year, September, and we did falter that level several times and did treat it as a important level, and that's where we're tracing right now. Now, to say that this is a retracement and we're going to be breaking further down, it could still very well be, okay? And because the markets still have some places to retrace since we're going into the election in the next 2.5 weeks. So keep that in mind. Now, looking at the stocks, I saw some tremendous weakness. Besides for Apple, which sustained itself yesterday, Facebook broke, okay, after its breakout did sell off. Okay, I do expect it to use that 264 as a support level. Okay, so keep that in mind. If it does retrace to that level, then that's where I would expect it to retrace to. Okay, but I'd like to see some continuation here. Microsoft, same story. Okay, although it had that gap up and initially did retrace a little bit, I do expect it to use this 215, 220-ish level as a support level for a subsequent bounce. Now, looking at Alcoa, came out with earnings yesterday, not so bad, okay? So with that said, we're trading at 13, okay? We're not in the highs of where we are, 6 months ago to a year ago, but still we're trading on the upside in a pandemic, okay? So we do have a resistance-ish level at this 1364. So if we do inch closer to it, we're breaking above the 30-day moving average. So that's important as well. So with that said, okay, I'd still be looking to keep this in mind. Now, looking at Amazon faltering here, okay, to 33.59 from its 34.81. Now, remember, high-tech stocks are coming up with earnings towards the end of the month. Prime Day was a couple of days ago, I believe. Amazon had that Prime Day where they gave steep discounts for people who are Prime subscribers to their services, okay, as a means, I think, to pump up the numbers towards the end of the year. Okay, so keep that in mind as we're trying to enter the latter part of the month of October. Okay, generally the markets do sell off in October, and since we are in a pandemic and election era, I would expect them to retrace as well. However, I think the Treasury is still sustaining it, okay, still keeping a positive attitude on the markets, so it could be choppy going into the next couple of weeks. I do expect that. This is Fred Razak, and I wish you guys a great trading day. Thank you.